Hi guys, welcome back. A last outlook for the year of 2024. And with that, obviously, fully a beautiful haircut from my side here. Beautiful in markets. Cryptos, well, not too much. Stock markets, equities, slightly shaky. Will they fall in the next couple of weeks or remain sideways after this recent slight correction on momentum? Let's examine what goes in markets and what might be the outcome for the next couple of weeks ahead. First of all, January faces the inauguration of newly elected President Trump in the US. This might move market momentum. However, what we could see moving forward is volatility. Might be one step. We remember back in the days Trump was causing and using Twitter basically to kind of run his politics moving forward, that he also obviously had grown slightly further and using potentially different markets and different techniques in and when he's going to rule the country is kind of one thing. However, the politics driven by surprise announcements, surprise momentum is likely what doesn't change, which is the interesting situation moving forward. Let's move on to charting patterns right now. The XRP market, well, it was moving towards way higher levels. Is there now a correction happening? Looking at the recent technical patterns here, especially this pin bar candlestick we've seen, leaves market participants for some potential downside to potentially face profit taking moving forward. Traders, millennials, among others as well, are kind of known for profit taking after the markets have reached high points here. This was 2017, where the market moved tremendously to the upside, where we've seen the utmost high point in history, 3.3 US dollars. And now the market motivation plus this technical pattern. I know, Frank, why do you always trade the markets to the downside? Because it simply makes sense when seeing those patterns, and that's exactly how we plan moving forward, at least with the XRP or Ripple as it's called. The Bitcoin market doesn't look any particularly different here. After the recent high points, we might say the same story could be seen in the Bitcoin market, at least medium term, or say in the next couple of months at least. There might be just some shaky market momentum here in this market environment. And guys, I mean, we've been trading, let me kind of draw this trend line here. We've been trading at extremely high levels. A move to lower levels towards the 70,000 psychological support zone is what might be seen. If not, the market could actually even weaken further towards the 59,000 level. The uptrend definitely intact. The correction definitely should be expected. And after the recent high points here, downside momentum is at least what might happen at some point, and that obviously is something we should and shall factor in when moving forward. Looking at the Ether market, the same story had happened. If the high point won't be triggered, the market might fall. That's what happened actually here, and hence obviously downside momentum is for now at least what we could see in this market environment. So all those markets have one thing in common. They all look like that profit taking is on the horizon. The same with Solana, looking beautiful. We had a long position, didn't work out, and then obviously now with a corrective pattern here seemingly intact, we would say, hey, the trend line here, the recent support area, that's the support where the markets took off subsequently. This was the support zone when the all-time high was created. Now could bring us to the point that first of all, 50 moving average as the rising trend plus our drawn in trend line could offer enough support for this market to basically start resuming upside momentum, if at least it does go back to lower price levels here at some point. So we have the crypto markets, and they are seemingly just at the moment kind of shaky. They remain shaky. Profit taking is one thing. The market momentum, the dollar strength could be another, which is pulling the market to the downside. Third, some political story from the recent uncertainty taken positively by the election of Donald Trump, who had said he would be an advocate for the crypto market, which was why the market took off substantially, is seemingly fading. So we might say there could be room for correction, first of all, and that's our next topic here, what we might see in the equities sector as well, because the equity sector is kind of quite interesting. Now, we had a very substantial move to the upside. The last 2 years gave us a rough 50% upside here when looking at it from those markets, right? So just down here, 3,600, we are now at 6,000 something. If we are looking at it from this perspective here, where the market started, 3,850, the market is closing just shy of the 6,000 psychological round number. The upside in the S&P might still be a kind of taken, and in January could use upside momentum here up to this trend line. But again, the same story calls in the S&P 500 for a potential correctional pattern. Upside intact, yes. Momentum towards the trend line moving on further. However, shorter term, we have the markets shakiness brewing, and that's exactly the resistance area. The market was fading here, was retracing higher, and now is simply fading as well. Whether this is going to kind of move the markets to this area, or maybe a test of the 50 moving average, or whatever else is brewing is on the horizon, is what we only see in the next couple of weeks. However, it looks like the upside positively behaving, but at the moment, shorter term, the market motivation here, if we are drawing it towards this level, could point for some slight momentum to the downside, which is also true for the Dow Jones. So most markets are kind of remain in a shaky position here. Dow Jones slightly weaker. The DAX printed a beautiful turnaround pattern. So a couple of trading days here to go. We're trading on the 30th of December, today, tomorrow, as the market doesn't show any further momentum to higher levels. We might say, okay, there is a bit of a sideways price action, not much being expected here. So that would bring us to a beautiful turnaround pattern, all-time high, plus what we see here in this DAX market. There is an overbought territory here, a super high elevated level given this MACD index, and that's now with this beautiful pin bar candlestick pattern, something where bear market traders might say, hey, glass is empty, but it's time for kind of some positivity here with downside motivation potentially brewing. Now, does the market with this 2024 and 2023 year then now tell us that we will go eventually lower? Not quite. Bear market traders might say there could be quite a bit of meat on the bone to be digested should we see falling price pattern. On the other hand, the bulls would say after a tremendous run to the upside, it could be time for some profit taking, but the market might not really necessarily fall substantially. So it's up to you to determine how you position yourself. However, that the recent last 2 years, say 25% gain in each of the markets will exactly as well be tolerated in 2025, meaning to say, will we see another substantial rise also in this next year, 2025? That might be in question. I myself would position myself slightly cautious and would just keep dividend portfolios or my dividend portfolio alive, causing and looking for trading opportunities in the next couple of weeks ahead. So that's for the positioning part. What is the oil market telling us? Well, it was and it looks like kind of shaky. Yeah, so there is opportunities for this market to weaken. However, the market's pin bar candlestick pattern, our bread and butter here. So this pin bar candlestick support zone, we said if the market falls, we want to be short. I still am in some short positions. Stop loss up above the 50 moving average, which acts as a bit of a resistance area as well here. The high of the pin bar candlestick, and we should draw this. Let me use the recent and normal trend line candlestick pattern, line here. This is just where the market might show us there is some strong resistance and the market is about ready to fall further. But what if the market doesn't want to fall? Then it obviously kind of will just eventually go higher upside at least is the key takeaway here. It looks like that weakness should and could and might be seen based on the candlestick patterns. Yet if the market does not want to fall, it simply just moves higher. So prepare for this one here. We remain in our short position for now and digest the market moves accordingly in the next couple of trading weeks ahead. That's the plan, at least in this market. The silver market, well, something kind of quite cool and interesting, obviously influenced by the strength of the greenback. We see that silver is not really doing anything much. It is now trading at the 50 moving average, which could actually give us further momentum here and causing a potential further market weakness. The downside motivation here in this market is just simply what is driving the force for now. If we see dollar weakness, which I think it just doesn't look like this, silver would likely kind of face upside momentum. The long trend is still intact. However, the market is simply at the moment not keen on moving higher. Reasons for this, there might be quite a few. It just looks like simply that the positive sentiment is just and has been evaporated here. The next line in the sand would be just below the 29 area, 28, basically the early 28 zone. That's the line where I would wait for potential upside motivation to develop. Currently being driven by a substantial downtrend here. Maybe any rise in this market by any pin bar candlestick could also drive the market lower. However, if the market is just about to respect the low point here and the 50 moving average, we could also see that another breakout will happen, as the silver market simply is driven by this market pattern, by the trends for now. The downside seemingly in check for now. The upside trend, long-term upside trend, basically as well unchanged. But for now, we are in a corrective pattern. This corrective pattern might be due to continue until further notice. So we shall stay tuned on how this goes. The same story is true for the gold market. We have some geopolitical tensions which are easing somehow, right? It's been a bit quieter from Gaza Strip, Syria. Well, that's the ongoing story. We have Hezbollah, Lebanon. And further ongoing, we have Iraq story, and we have still the China-Taiwan conflict, where is not too much in the news, at least for now. So all that seems to be around the Christmas season kind of panned out, at least from markets, which is potentially why the gold price is just referring to the dollar strength. Pulling this market maybe lower. So I would wait for some further upside first of all, and I would wait for the upside only to be triggered if a buy stop at higher price points might be seen. Dollar index, last but not least, because we're coming to our year end, so don't worry, you haven't missed anything much. We meet again on Sunday this week latest to talk about the new market trends. What's going on in the dollar index after the corrective pattern? We said this weeks ago here. If the high point is being triggered, the market might explode, and that's simply what is happening. The resistance area, wide resistance zone, has been tested and now broken to the upside, so upside momentum might continue. That should affect the US dollar market motivation. The euro dollar about to weaken further. That is clearly the case here. Euro dollar back to the downside trend intact. Any retracement to the upside taken into consideration for selling opportunities. The pound US dollar, same but different. Exactly same story. We see that the market was trading slightly higher. Resistance area tested. Basically retracement kind of being used for selling opportunities. Same trend to the downside starting or being resumed. Downside momentum might occur. The Aussie, same story as well. With the Aussie, however, I feel so tricky about stock markets. Well, generally tilted slightly to the bearish market move, but the Aussie is so weak, and that's kind of why I would be cautious with some fresh investment opportunities in the stock market. And I would rather say let's prepare for potential weakness. We still have some room to the downside here, brewing in the Australian dollar. Next line in the sand, the long term, that's COVID, right? Yes, the long term supportive range here, 61 cents to the dollar. That's exactly where the next support line kicks in. So until then, quite some momentum to lower price levels being expected. Hey, the Japanese yen, what's going on with that one? The dollar JPY is moving quite a bit up to higher levels. So does that mean the Japanese yen remains weak? It looks like, at least for now. We have the Euro Japanese yen, which is turning around. Oh, the Japanese yen's strength depending on the counter currency. Well, in this case, the counter currency is the Japanese yen. On the base currency here, the Euro Japanese yen actually moving higher, kind of pushing to the downside, retracement higher. So now it looks like maybe this trend has changed. Maybe this trend now tells us the market is intact in terms of potentially a further motivation here. If that makes somewhat sense, I might say I would call for further room here towards the 50 moving average in the euro against the Japanese yen. The pound JPY kind of not really obviously totally different. The pound slightly stronger, but instead as well here of a major change and a major rise in the market, we see as well shorter term there could be opportunities. That's the daily chart. Any weakness here could lead this market might break towards the downside. Guys, I think we have not forgotten anything major. It's the Christmas time. Again, we had not done any outlook last week since the festive season was intact. That's why the glass already is pretty much empty for us here right now. But we will be back end of the week here with our outlook. We remain quiet and remain kind of rather on the sidelines mostly for now. Holiday season, the second week of January should be more where traders wake up again from their sleep over the long winter period and focus on new and fresh trading opportunities. Thanks for tuning in, and please just leave some comments below the video. Don't forget to subscribe to our channel, and obviously we'll look forward to see you again soon in 2025. Have a blast, have a great year, and season's greeting from all of our team here at fxstrategies.asia. Take care, guys. Ciao, ciao.